Hi everybody, welcome to another video. What is going on everyone? Welcome to another video. All right, let me log in. What is going on you guys? Welcome back to another video. As you guys can tell by the title, we are going to be talking about the 3 main trading habits that are holding you back from becoming a consistently profitable trader. However, before we get into that, if you guys are looking to join my free Discord, link is in the description. I live trade Monday through Friday, starting at 9:30 to about 10:30, 11 o'clock in the morning every single day. And if you guys are looking to up your allocation on a prop firm, check out Lucid Trades. Link is in the description as well. Use code LoeGpa, you get 45% off. It's like $70 all in for a 50K account, no activation fee. So super solid deal. Okay, go check that out. Getting straight into the video. First thing I want to talk about is getting married to your bias, okay? Every beginner trader is going to go through this because your conviction is going to suck ass when you first start trading. However, over time, this will get better. But when you get married to a bias, you tend to miss the setups or take the wrong setup and get stopped out. And then what happens after that? Well, you probably crash out because your psychology already sucks, or you start to get FOMO. And what happens when you get FOMO? Well, same thing. You're either going to take the wrong setup or you're going to see price running without you and just enter blindly because you're just riding the trend, right? You're going to have no conviction for that trade idea. Every trade should have a story behind it. You shouldn't just be entering a trade because you see price running. No, every trade needs to have a story behind it and you need to build conviction behind every trade. But if you start to get FOMO and you see price running without you, all you're thinking about is a dollar amount. So you're just going to press buy, and that can either hurt you really, really hard, or you can get lucky and win, but then you're going to get used to those wins and you're not going to build actual conviction to take nice trades in the market. So to counter that, we have to start learning how to trade with the market and not our feelings. It's literally just that simple, right? Trade what the market is giving you and react off of that, okay? Stop reacting off of your feelings. React off how the market is moving, okay? If we hit a certain key level and we start to reject off that level, we can assume, okay, we're either going to retrace or reverse on the day. Or if we hit that draw on liquidity and we start just displacing through it, we can be like, okay, maybe we're going to hit a draw on liquidity either higher or lower, depending on which way we're going. And then we can look for a continuation model from there. So the way I like to counter this and build conviction in all my trades is just mark out draws on liquidity on both sides of the market, buy side and sell side, and whatever one gets hit first, I like to see how price reacts off of them. I'm going to drop a draw on liquidity video on Friday, which should be the day after this comes out, and it's going to be super informational. Okay, this has helped me out a lot. So when I draw my draws on both sides of the market, right? I have my buy side draws and I have my sell side draws. Whatever one gets hit first, that's completely fine. I will have a bias coming into the morning, but I won't let it affect how I trade. Okay, if we come down and hit sell side first, what am I looking for? I'm looking to see how price reacts off those sell side levels. If we start displacing through them, I can assume, okay, we're going to go lower, and then I can look for a continuation. Or if we start rejecting off those levels, I can then look for SMTs or like our entry models, build internal structure, and then take either a PDI model or a MEC model up and towards either an unfilled gap or some sort of highs resting above. And same thing if we take out buy side first. Let's see how price reacts off those levels. If we hit the buy side, okay, and we start displacing through all of our buy side draws, we can assume price is probably going to go higher. Then we can look just for a pullback into a 5 or 15 minute gap and look for a rejection out of it. If we hit those draws first, okay, if we hit those buy side draws first and we start seeing a rejection, same thing. Let's build internal structure. Okay, let's react to the market. Let's take what it's giving us, right? If it's giving us a reversal or a retracement setup, let's go ahead and take that, right? There's no reason why we shouldn't be, especially if we build internal structure. So let's look for internal structure, right? Along with the rejection, right? Let's build conviction, and then we can go ahead and look for our entry model. As long as we have clear draws lower, there should be no reason why we shouldn't be entering that trade. So again, the best way to stop being married to a bias is just to start being reactive and stop trying to predict where price wants to go and react to what's happening in front of you. The second thing I want to talk about is jumping into live accounts or a funded account way too early in your day trading process. And that might seem a little crazy coming from me because if you do watch my videos, I am a big advocate for getting as much live market experience as you possibly can. However, you can jump the gun and it can end up hurting you. And the reason I say that is because if you do buy left funded and you don't have an implemented trading plan that you know like the back of your hand, number one, you're going to blow that account. Okay, so you're just going to waste money. And number two, like I just said, you have no solid trading plan. So you're essentially trading what? You don't have an implemented trading plan that you go and back test that you know that you're looking for in the market. You're basically just riding the trend at the end of the day, right? And what is that going to cause you to do? It's going to mess up your psychology and cause you to make dumb mistakes in the market. Because let's all be honest, right? When we first got our first funded and we failed that shit, okay, what did we do? We all got in our heads. I guarantee you 98 to 99% of us got in our heads, and it started affecting the way we traded because now we're scared to lose, right? Now we're scared to blow another account because you see all this stuff on social media talk about, oh, if you blow a funded, you need to go to demo, which is true to a certain extent, but you should be starting in demo. And if you start in demo and then you can, build your trading plan up, build your conviction, okay, get used to the live markets, and then you go and blow your account, that's completely fine, right? Because you have an implemented trading plan. But if you just jump into those live markets or those funded markets without having an implemented trading plan, you're just going to get cooked and you're essentially just wasting your time, okay? And you're wasting money. The worst thing you can do to yourself as a beginner trader is have no implemented trading plan and also have bad psychology at the exact same time. And if you jump into your funded way too early, you're most likely going to get both of those, okay? Become profitable on demo first. I wish I did that because, like I said, I jumped straight into the fundeds after watching TJR's bootcamp, and it was the worst 3 months of my life. I blew so many funded accounts for no reason, and I wasted so much money. All right. So again, become profitable on demo first. Minimum I'd say is about 3 weeks. I think 3 weeks is good. Most people say 2 to 4 months. You don't need to do all that. Okay. If you spend 3 weeks in the live market and you can start building conviction, okay, and you're winning some trades, you're losing some trades, that's completely fine. Okay. I don't expect you to have an 80% win rate, a 70% win rate like these profitable traders do. No. If you have a 50-50 or even a 30% win rate, that's completely fine, but you're getting that live market experience and you're starting to build that conviction and get used to those live market conditions. Okay. So start in demo first. Please start in demo first, because I fell into this trap and that would have helped me so much if I just started in demo first, and it actually would have locked in my psychology a lot quicker. So with that being said, the last thing I want to talk about is you guys jumping onto the markets every single morning and trading just to win. Okay. You're solely jumping onto the markets to make a certain dollar amount and then get the hell off. And I'm telling you right now, if you continue to trade that way, you are going to lose so much money. All right. You're not trying to understand price whatsoever. And the fastest way to profitability is literally just building conviction every single day. How do you build conviction? You learn from your losses and you learn from your wins. Okay. You see and analyze what price is actually doing rather than just riding a trend and blindly entering and literally just trading to win, right? When you do lose, okay, see why you lost. Okay, dig deep and see what exactly price manipulated into, if it just stopped you out, and then reverse. See if price manipulated into something. Maybe there was an unfilled 15-minute all the way to the left and you didn't see it, and price wanted to hit that 15-minute first and then reject off of, right? Learn from your losses. Stop trading to win. Trade to learn every single day. Trade to build your conviction better and better every single day, because I can tell you right now, 2 months ago to this very moment, okay, my conviction has gotten 10 times better. And I had a rough about month and a half, and it's picked up about these last 3 weeks. But that month and a half, I was pretty much a break-even trader, and being a profitable trader and staying break-even for, I would say, over 3 weeks, maybe 4 weeks, possibly even 5, 6, 7, possibly even 5. That can add up, bro, and that can fuck up your mentality jumping into the markets. But what do you have to do? You have to just learn from everything, okay? Look at it from a bright side. Figure out what you're doing wrong, and then go ahead and counter that in the market, okay? Conviction cannot be taught, but it is something that can be learned. I'm a big advocate for that, okay? I don't care whose Discord you join. If you join Mamba FX's, right, TJR's, PB Tradings, they cannot teach you conviction. No one can teach you conviction, but you can learn it. How do you learn it? Just by fucking up in the market, okay? So stop trying to trade to win. Trade to find your setup and your setup only. And when you do lose, okay, learn from those mistakes. It's that simple, okay? Because conviction is literally everything. I'm like the biggest advocate for that. That's why I can't wait till this draw on liquidity video drops, because there's so much sauce in it. And I hope it drops the day after this, okay? If you guys have any questions, comments, concerns, go ahead and drop them in the comments, all right? I hope you guys learned something from this video. I love you guys. I hope we all succeed together. All right, keep going. Do not give up on yourself. You guys got it, okay? It might seem hard right now, but I promise you, you guys got it. Like I said, I love y'all boys, and I'm out of here.